I'm Corbett Wall with DV Auction, here with a 3-minute cattle market update for Wednesday, May the 25th, brought to you in part by the American Simmental Association. Discover the advantages of responsible crossbreeding with Sim Genetics. Go to simmental.org. Well, the cattle on feed report that came out there last Friday was really bearish, and finally the board traders on the board there decided to take notice of it. So many times, especially when it's bullish, they just let that cattle on feed go out on buy and don't pay any attention to it. But and for good reason. There was really hard to discount the bearishness at the big placement number, and so far above what the analysts had predicted. And it really took a toll on the market. We knew it would. This market's really been teetering, just holding itself up with the short-term fundamental bullish factors that were going on, but it just took one big bearish thing to just watch it all tumbling down. Your live cattle futures on the June contract on Monday were down 290. Most of the others, especially the nearby out fronts, were all down the limit. Tuesday was down just 15 cents, but ended the day on Tuesday at 118. That's the closest spot market we have on the CME board there to give us an idea of what fat cattle are worth other than the cash market. It's at 118, which is nearly $13 under where the cattle traded last week. Feeder cattle futures for August on Monday were down 450. Of course, we knew they were going to be down big. Tuesday was down $1.32 to end the day on Tuesday at 142.10. The May contract, you really can't pay much attention to it. It's just trying to align itself with cash, and that's really the bad thing about it. It can just jostle itself back and forth to just pull right in line with what cash is, and really, so when you get close to the nearby on the feeder cattle and you get into the spot month, it really doesn't tell you a whole lot. But the weighted average on the fat cattle trade last week on 72,400 head in the 5-area feeding region compared to 139,500 just a week ago. But the lower market, of course, a shorter trade, but a lot of those sales were for the next few weeks out, so that's going to hurt even more. But the weighted average on your live steer price was 130.75, which was down $1.81. Your average dress steer weighted average was 204.07, which was down 432. Huge basis though for these hedged feeders to help them get closer to a break even. And the bad thing about being able to take advantage of a big basis is, you know, you're kind of on a short leash there, and you're going to run out of hope, and it's really hard to try to buy any feeder cattle to hedge, because when the board's running that far behind cash, then your out fronts, of course, are going to be running way behind what they need to be too. But this discounted board is hard to hedge with your nuts you're looking at now close to $1.13, and it's hard to back up some of these yearlings that are selling up close to $1.40 in some cases. It's hard to back them into $1.13. Already had a little bit of fat cattle trade this week on a live basis at 126. We know it's going to be a lot lower. We've had a few dress deals at 198 in Nebraska, you know, more than $6 lower there. So it's really going to come down, and we're just looking for something to maybe slow it down. We knew this market was coming down. It's not a big surprise. We've been talking about it, but we're just trying to find something that might slow it down. Usually something pops up in there, but is the currentness of the feedlot situation enough to slow this thing down or give it any bottom side support? It's hard to see that. It's going to be tough to keep the currentness because of all these huge feeder cattle we've had. We've had heavy feeder cattle coming off of the traditional graze out, or traditional wheat grazing, and then we've had these huge heavy cattle coming off of the graze out wheat. And then when we get another month or two more, we get into those midsummer yearlings off the double stock pastures in some of the big grazing regions. They're going to be huge because they've had ample moisture, and all those big cattle, you know, you just get used to putting so many days on those cattle, and they're going to be big, which is going to hurt our weight situation a little bit. But it's up to these feedlots to really keep selling those cattle, and it's going to be hard to make themselves do it on a down market. And and we see how disadvantaged these feedlots are trying to trade with these packers. You know, there's just 4 of them, really. You know, not counting some of your big regionals, but it's always easier to get 4 heads together than it is 400. You would like to see some of these feeder associations, you know, maybe TCFA or Nebraska Cattlemen's, try to do something to help these guys manage their show lists and manage their sales, and talk to them a little bit. But your cattle feeders are very independent. That's what they love about it. They're going to do what they want to do. They're going to contract cattle. They're going to sell them out front. They're going to leave a handful of guys holding the bag, trying to hold this negotiated market together. But you look at some cash feeder markets. Oklahoma City had 9,800 head on Monday. Feeder cattle were $5 to $10 lower. Calves 8 to 15 lower. Joplin had 5,800 on Monday. Their market wasn't down quite as hard. They had a lot of middleweight cattle. Mostly $5 lower, spots as much as $8 lower, but maybe a little bit better demand, but not nearly as big a run. Both of those sales and all your big volume sales on this next Monday are going to be closed due to Memorial Day. But check out DV Auction. We've still got some quite a few production cattle sales coming up. We've got some horse sales coming up. We've even got some production sheep sales with some breeding stock on some sheep there if you're interested in that. That's more than 3 minutes. We'll talk to you on Friday.